All right, we're going to dive right into this. I'm pretty excited about this. We've been doing episodes for a year or so. We've been on doing different various content for the last few years. I published my first book, Economic Termites, in 2019, and so we just published my second book called Farming Assets this past week in October 17th, so at the time of this recording. So I'm pretty excited, and I wanted to give tribute to really there's really two people that really kind of got my career from 2001 to now got me interested and got me fascinated, got me intrigued. And the two people are Robert Kiyosaki. Okay, Rich Dad, Poor Dad, Cash Flow Quadrant. Cash Flow Quadrant was life-changing. It changed the trajectory of what I was going to do in my life. It gave me the courage, gave me the thought, gave me the motivation to do so. And then as my career progressed, I became more and more and dove more and more and studied more and more the second person, which is Warren Buffett. Now, everyone says, when you look at Robert Kiyosaki's cash flow quadrant, you got the E quadrant employee, S quadrant self-employed, B quadrant business owner, and I quadrant investor. A lot of people throw Warren Buffett into investors. And if you've watched or listened to any of our or read any of our content, my content, you'll know that I'm not a big fan of using the I quadrant as an investor quadrant. I like to use that quadrant and talk about assets. Maybe it's semantics. That's perfectly okay. I'm allowed to do this. These are my episodes. So, but the reason why I say assets is because the majority of the things that we do as a business consultants with our clients is to focus on how do we lower, how do we minimize, how do we utilize the rules, the tax code, the regulations to our advantage. So like you've heard me say this before, like banks on the river. Okay. The banks of the river allow the flow of the water to go in a direction. Okay. And they're there for a reason, just like laws and regulations are there for a reason. And they give us good guidance. Now, there's the control of the flow of water, the control of the flow of cash is up to us. And how do we dictate that is based on the assets that we have. So the billionaires have multiple assets. Maybe they got springboarded because of their initial asset, their business, their brain, themselves, their belief in themselves. Some great stories to go read are Sylvester Stallone is a great story to read. Lived in his car. A great story of success and what he sacrificed. Now, I'm not saying go live in your car and sell everything, but I'm just talking about the motivation, the emotional desire, and the will to want to succeed and do what you know is right. And so Warren Buffett is another one. Now, he didn't necessarily sleep in his car. He was very smart, is today, but he's an asset builder. Sure, he takes money and capital, invests it in businesses, but his focus is how to utilize those assets to create more assets. Okay, franchising assets. And I'm using the word franchising not in the traditional term of franchising businesses, but in the term of duplicating, turning Monopoly into a 3D board game. And I think that is absolutely fascinating. So all of that being said is that I've learned so much, and we've used a lot of things from both of those gentlemen. There's plenty more, but those are the two that really are the anchors, the foundation of a lot of stuff that I want to do. So I want to give tribute. And so we're going to do multi-series episodes. I don't know how many episodes, but Seeking Alpha, which is one of the websites, one of the not just website, but publications, if you will, that I subscribe to. They give some great information. If you've listened to anything or watched anything that we've done, read anything we've done, you know that I get information from everywhere, not just the liberal media, not just the conservative media, but also out of country. And I think it's very important for us because I get a full, whole-rounded, holistic views of what's happening. Now, all that being said is that Seeking Alpha came out with an article July 9th. So this is a little old, but it's not old because of the information. This was the Berkshire Hathaway annual meeting. Okay. And they came out, the writer, the article, the author of this, David Koss, wrote a summary of 48 questions and answers that occurred in the Berkshire Hathaway annual meeting. And I find this fascinating because there's a couple strategies that Warren Buffett discusses every year, that the majority of people have no idea what he's talking about and why, or how to, more importantly, how to implement that strategy in a strategic game plan to accelerate or to accumulate or to utilize assets, to go back to that terminology, franchise assets, duplicate assets. Okay. And so we're going to go through these questions, and I don't know how many episodes this is going to be, but I'm going to try to keep each one between 10 and 15 minutes. So I don't know how many questions. I'm going to read questions. I'm going to read answers. I have not gone through this yet. I want to make sure that's very clear. I try not to do that. I want to come with fresh minds, fresh ideas, open mind, not preconceived thoughts and ideas of how I'm going to approach this content. I want it to be as live as possible without it being live, and it is recorded. So I don't read any of the articles. I don't read anything pre-hand. Now, every once in a while, I'll have read something, or I'll watch a YouTube or a video or something that will spark me to want to do this. And then, yes, I'll do an episode on that. So this is really going to go through that. So the summary of this is Berkshire Hathaway's annual meeting saw Warren Buffett discuss the company's first quarter earnings report, with operating earnings totaling $8 billion in a quarter. So in 3 months, their operating earnings were $8 billion. He expects most of Berkshire's businesses to report lower earnings in 2023 versus 2022. Okay. So what's that mean? Well, if you've ever looked at Berkshire Hathaway's website, I'm going to tell you, not impressive. Okay. Not impressive. Now, here's why. Berkshire Hathaway is a multinational conglomerate company. What that means is that they don't have a product or service. They invest. They're a business that invests in other businesses, and I think it's important for us to understand and see that and know that. Okay, now you can go on their website, and there's a message from Warren Buffett. There's annual reports, SEC filings, basically any words, special letters from Warren or Charlie in the past, everything. Okay, but it's just basically it's a executive summary. Their official website homepage is like a executive summary with nothing but links. Okay, now there's one link called links to Berkshire subsidiary companies, meaning companies they own. And there are, let's see here, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 30, 32, 34, 36, 38, 40, 42, 44, 46, 48, 50, 52, 54, 56, 58, 60, okay, 62, 64, 66, 67 companies they own within the conglomerate. Now, when I say own, meaning they own it, not an investor like in American Express or Apple, but they own it. So if you looked at it, there's 10 insurance companies in here. There's jewelry companies, there's trucking companies, there's shoe companies, excuse me, there's railroad companies, there's manufactured home companies, furniture, Duracell batteries, Kraft Heinz, energy companies, motorcycle jets, Pampered Chef, you name it, Oriental Trading Company. I didn't even know he owned Oriental Trading Company. Candy. There's so much stuff in here. Okay. Now, why do I go through this? Because it's assets creating assets. assets creating assets. He looks for good assets. He doesn't care what industry it is. Now, he may look in a particular industry to say, I think we need to diversify in this industry. I think this industry or this particular asset class is going to do really well. Let's go start researching and looking. Okay, so when he says he expects most of Berkshire's businesses to report lower earnings in 2023 versus 2022, he probably has a good feel and indication of what the direction the economy is going as well. Now, second bullet point, Buffett and Charlie Munger answered questions on a range of topics, including the economic consequences of Silicon Valley bank deposits not being fully covered and the impact of AI and robotics on the outlook for commercial real estate Now, I will say this, they'll give their opinions and they'll give their opinions on AI and robotics. Okay. Now, keep in mind, their opinions about technology sector took them about 15 years to embrace it and feel comfortable enough to start investing in. And then when they did, they went all in. They continue to buy Apple stock. As an example, they don't buy all technology companies, but they buy good assets that happen to be in technology, and now only after they understood the business model. I'm going to say the same thing about AI. So they may have negative things to say about AI. And quite honestly, AI is like the cryptocurrency. It's the Wild West. It's such a new industry that there's new things coming out all the time. That doesn't make it bad. It just means from Warren and Charlie's perspective, they're going to walk in tiptoeing. They want to know what they're getting into. They want to know the asset before they put investor cash capital into it. Now, the other bullet point, the meeting also covered Berkshire's investments in companies like Apple, Geico. Now, they invested in Apple. They don't own all of Apple, but they own all of Geico. They own all of BNSF, which is a railroad company. So we want to keep that in mind. All right. So May 6th, 2023 was their meeting. So now the notes are taken by Professor David Koss, who wrote this summary. He's the Department of Finance, Robert H. Smith School of Business at the University of Maryland. Okay, so that's who we're giving credit to. He has there's approximately 40,000 shareholders that attended the annual meeting. Okay, tell me an annual meeting that attracts that many people, right? That's crazy. It's an event. And that is why I think Berkshire Hathaway and Warren Buffett and Charlie have done such a great job. They've turned accumulating good assets into a entertainment and to excitement. Okay. Now, you can make the same argument about a company like Apple. They do the same thing. There's huge events when they release certain things. Okay. Now, during this, there was a humorous film which was shown, including a variety of commercials of businesses owned by Berkshire Hathaway, which the investment of of Apple, Geico. Jamie Lee Curtis appeared in a skit that was initially shown at the 2006 annual meeting. She then appeared in an updated version in 2023. So entertainment, right? Give the 40,000 shareholders that show up some excitement. Now, Warren Buffett's 92. Charlie Munger's 99. They have two of their lieutenants, Greg Abel, who's 61, and Ajit Jain. I mispronounced his name. I apologize. And he's 71. So lots of experience here. I believe Greg Abel and Ajit were part of, they were running companies that Berkshire had owned or bought or purchased. And they run different divisions. Okay. So a lot of experience here when we're looking at this. Okay. Now, Buffett discussed Berkshire's first quarter earning reports, operating earnings equaling $8 billion in the quarter, which I said earlier. He expects most of Berkshire businesses to report lower earnings in 2023 versus 2022, which I reported earlier. Now, questions were submitted by shareholders to Becky Quick of CNBC, who alternated with the audience. Okay, so you have this people gave in questions pre were Becky Quick, who's kind of moderating this, or if you will, or emceeing this, if you will, and then live questions with the audience that they were asking. So they're alternating. So one submitted already and one live question. Okay, so we'll go through this. Question one, Becky Quick asked, if Silicon Valley Bank's deposits had not been fully covered, what do you think the economic consequences would have been to the nation? Buffett goes on to answer, says it would have been catastrophic. That's why they were covered. It was inevitable. Similarly, the U.S. would not let the debt ceiling to cause the world to go into turmoil. Charlie, do you have anything to add? Charlie Munger said, nope, I have nothing to add. So, but here's what's interesting. In the financial crisis, there was this structure of too big to fail. Okay, there was this formulation that the government came out, and they said that there were certain financial institutions that were so large that it had such an effect on not just the U.S. economy, but the world economy, that they're in the too big to fail category. Now, Silicon Valley Bank, nobody has said anything about them being too big to fail, but in this situation, in what had occurred, something in their financial statements, something in the formula did not meet up with the too big to fail. But when they failed, they were too big to fail. So to Warren Buffett's point, they were covered. Now, that's important because, as you may have heard me talk multiple episodes, all the time, I'm very, very boisterous and loud about this, that China is only the second largest economy because of you and I as Americans, because of our consumerism, because of who we are, because what we do in our ideological republic of freedom. We get to choose what we want to do. Okay, now that is changing, yes. But as of right now, we are not a communist country. We are not China. We are not Russia. We are not a dictatorship like other countries like Iran or the Middle East or anything else. Okay, we are still a free republic, and we still have the right to choose with our dollars what we want to purchase. Is that changing? Yes. Okay, and I'm not making this about politics. I'm making this about business. And I'm making this about life. This is a reality. Okay, so, but the good thing is, and this is a double-edged sword when I say this, the good thing is that we also have a government or a system where we know that there are negative consequences and repercussions of something not working or a business failing. What it could do to other countries, right? Sure, it'll hurt America. We could go into a recession, and and people would lose their jobs. There'd be layoffs and there'd be corrections. It's like kind of like a forest fire, right? It's horrible at first, but it's really good for in the end of the cycle. Not such in the rest of the world. This is not the case in the rest of the world. Okay, so it is still our responsibility. Yes, we may not be going to other countries with guns and weapons or money to support them and policing them, but we definitely do it from an economic perspective as well. Very important to understand. And I'm spending some time on this first question, and I don't know, maybe I'll spend this amount of time on each question. That's why I said earlier, I have no idea how long each episode is going to be. Okay, but I do know that this is very important to understand and to comment on. Okay, second questions from the audience. Mr. Buffett, Mr. Munger, do you ever make bad decisions because of your emotions? Buffett responds, we make bad decisions all the time, but we do not make emotional decisions. Amen. And we will stop this episode at this. This is one of the things that we try to do as much as we can in our consulting and working with business owners, is talk about the numbers. The logic has to dictate the action, and then you can be emotional. Okay, meaning, do the numbers work out? Have we crunched the numbers? Is this make sense? Have we thought about everything in the planning process? And okay, we're ready to execute. Then you can be excited, or you could be scared, or have uncertainty, or be giddy because you're doing something you've always wanted to, and now you're doing it, right? But this is such an important thing, is because in the financial world and as businesses and as taxpayers, we make emotional decisions all the time that dictate our actions. And this is such a great thing. We make bad decisions all the time, but we do not make emotional decisions. Bad decisions are not, you don't go into a decision knowing that it's going to be bad. You go into a decision knowing that you have all the information that you could possibly gather, put it together, and then when you do that, you say, okay, we're going to make an educated guess, educated decision based on all the information we have, and we're going to do this. And it doesn't always turn out the way we want it to. That's life, folks. You can't be protected from that. There is no protection from that, other than not making those decisions emotionally. That's important. That's very important. Okay. So, hey, thanks so much for this, listening to this first episode. Tune in on next Thursday for our next episode, where we're going to continue to go through this, and we're going to jump into question 3. There was a lot of pre-funk, a lot of advertisements, like a movie, right? The first half hours are all advertisements. Then your movie finally starts. Well, welcome to my movie. But anyways, I think this is going to be so exciting. And again, like I said, I apologize. I wish I could say, oh, this is going to be 5 episodes or whatever. I have no idea, but I find this fascinating. Like I said, besides Robert Kiyosaki, Warren Buffett has the biggest impact on my financial, my business career, my life, and the way I look at things and my mindset. I don't do everything he does, but his viewpoint of assets, how to use assets to duplicate and franchise and create more assets, I think is absolutely brilliant. And so anyway, so I'm very excited to continue this on. Thanks for listening, and we will talk to you next week.